Mike, more kind of going back from a review standpoint into the mechanics of how things work. So if I have, making it really simple, if I have a prefix, I have a year end, so I have balance sheet accounts and I have income statement accounts, and I go through a year end, of course, then all of those things are clearing out, balance sheet accounts staying as they are going to the next month, the other one's clearing out, so I have a retained earnings issue. They start over, it goes to zero, and I move forward. If I produce a financial statement, you know, I'm in, say, my current month is March. Let's say I have a calendar year end, and I want to report as of November. How does this handle retained earnings and going back to properly state balance?
Yeah, I don't recall the exact logic, but that was looked at pretty thoroughly to make sure that we're getting the correct value, because retained earnings does work differently than other accounts. And if memory serves, we're going back to either the ending balance of the prior year or just the ending balance for that year, and then rolling from there. I don't recall the exact logic right offhand, but that was something that was pretty thoroughly tested as well to make sure that we're getting the correct values. In all these cases, we used a variety of different financial statements output from the Sage financial statement designer as the baseline, and then you're going through a series of closing periods, rolling forward, and then rolling backward and getting the same values, et cetera, et cetera. So again, I don't recall the exact logic, but I know it does handle that correctly.
Mike, if I wanted to test that, let's say, you know, because I'm not going to inflict this difference between delivering something that really works and you're going to be a hero versus inflicting something on your customers, maybe you should test it. So if I did a financial, you know, I have my data, and I'm going to do it with financial statements as of, you know, last October in this situation, and then use this, because there are, I don't know if you've shown them yet, I don't think you have, but there are workbooks already, you know, templates already on the Launchpad. So I can run a financial statement and run it as of the prior period. I could simply compare it to satisfy myself that it works. And I can even have my customer do that. To point out to everyone that your customers can get live, fully functional software and use it, you know, for free for a period of time, an evaluation period of time. And we'll talk a little bit more about how we accomplish that if they already have Office Connector versus not. But gives you an opportunity to satisfy yourself prior to doing anything that this technology really truly does work.
Yep. And so these are the six reports that I identified earlier. Again, they're on the Office Connector Launchpad. And so, as you said, James, you could run like the GL financial statements with drill down, which provides a pretty standard balance sheet and income statement layout. And I think that what makes this a little easier to use is, you know, if I'm going to use your scenario of say that we're in March and we want to get a report as of October, I have to think for a minute. How many periods back do I need to roll back if I'm running out just a standard financial statement design? And so I'd end up saying, okay, 1, 2, 3, 4. That looks like 5 periods that I have to roll back. With this, what I would do is simply say, I want last year, 2013, period 10. I don't really have to think about how many periods back that is relative to where I'm at. But then, as you said, you would run the financial statement and then compare the results. And you'll find that, you know, that's going to match. We've tested that pretty thoroughly. The one last thing I didn't really mention on the data folders part that I meant to is, let's say that you have data folder A and data folder B, and for the most part, their chart of accounts is the same. And I want to build a financial statement that consolidates the two. And for different sections on the financial statement, I'm going to maybe make use of my Query Designer license to get a list of base accounts that's dynamic. So if they add more accounts, they get automatically added, right? Well, let's say I do that, and I say, this section is going to be for income accounts. So I got a nice simple list of base account numbers for income. Well, between data folder A and data folder B, what if their list of income accounts is slightly different? One has a few that the other one doesn't, and vice versa. My query is only running off of one data folder. It's not running off of both. Now there is some capability, if you know some SQL, to produce a consolidated list of distinct values from both. But do keep it in mind that one other approach would be to have just simply a shell of a general ledger data folder that contains all possible accounts, and then run your query off of that to get the combined master list of base accounts. I'll just throw that out there in case that's something anyone's contemplating is building multi-folder financial statements. Is just keep in mind if you're going to build queries, dynamically query the list of base accounts, you need a means to come up with the list of base accounts that could apply in any company you're consolidating.